Welcome to Global Tax Talks. I'm Will Morris, and we're filming here at PwC's Africa Tax Policy and Business Symposium in Mombasa, Kenya, where I'm delighted to be joined by James Whitaker, who's PwC's Tax and Legal Services Leader for Africa and a partner in the South African firm. James, so obviously you've been hearing a lot from clients, both at this symposium, but also before. So let me ask you a couple of questions which relate to that, and obviously cover the whole of your Africa role as well. So what is it that clients are wanting, or perhaps I should say, at least hoping for, in terms of tax policy, across African countries?
Yeah, thanks, Will. I think there's a number of things to think about. First of all, clients do appreciate the predicament that many of the governments find themselves in terms of the challenge around the macroeconomics, and particularly post-COVID, and the challenge around sort of the revenue collection, or domestic revenue mobilization, as they sometimes call it. That said, clients are now, I think, expecting governments to probably take a wider remit than just focusing on tax policy. Governments have a number of tools at their disposal. If we're looking at the fiscal framework, we're looking at borrowing, we're looking at how government's spending money. And clients are really expecting governments and regulators to be thinking about things like transparency, how the money is spent, accountability, and indeed, quite frankly, good governance on really right across the spectrum. So that's important for them. Another thing that's really critical for clients, clients want the countries to succeed. They want the businesses to succeed, and therefore the wider stakeholders. And for that to happen, I think it's really important that the tax policy is linked, where possible, to the growth of the economy. We've been speaking to some clients where new taxes haven't had a fairly serious adverse effect on the sale of their products, probably leading to a reduction in the sales of the product, and therefore a reduction in tax revenue. And clearly, that's not a result that anyone wants. Now, we think of tax policy, it can either promote and help economic growth, or it can stifle it. Right. So let's stick in the former category. The final thing that clients are really searching for, and this was a topic on day one of the conference, is predictability. Right. So let's have a stable set of policies, and bring clients and other stakeholders along on the journey, so we know where the sort of the policy is going.
Yeah, that's great. There was clearly a lot of talk about we need pro-growth tax policies. We're prepared to pay tax, but pro-growth.
Okay. Pro-growth and predictability, we're on the right track.
Absolutely. Okay, so what are the major trends, again, that you're seeing across countries, sort of peering forward now?
Yeah, so some of the trends that we're seeing, well, first of all, a slight move away from the traditional forms of tax, and looking at new ways of raising tax. We're seeing a digital services tax, sometimes a sort of substantial economic presence tax in some of the countries, to look at new ways of raising revenue. Also, a reduction in some of the incentives that have been available, and allowances, and indeed a minimum tax has been imposed in some places. So those are certainly two things on the tax front that we're seeing around policy. Also, a lot more use of technology that is coming in, and by the tax authorities, and how clients adapt to that. And finally, unfortunately, the word complexity. Pillar 2, relevant to many of or several of the countries across the continent. So that's something that clients are grappling with.
What a gift from the north. Yeah. So what does all of this mean for clients, and how are they responding to some of these challenges and one or two opportunities?
Yeah, so around how clients are responding, I certainly think that we're seeing clients needing to be more agile, and how they adapt to that change. So sort of accepting that the only constant is change. Secondly, technology is certainly requiring more investment by clients in technology to keep abreast of the changes, so they can interface with the revenue systems, for example. And the third thing is really looking at probably a different set of skills that they need in the organization to be able to cope with all of these changes. So, the standard tax technical skills comes as a given, but, are we looking at people with being more digitally enabled, and really playing to that agile piece?
Great. Okay, so one last question, and you're going to be spoiled for choice with this one, but so what is one good and one perhaps slightly less good example of tax policy, again, across Africa? Pick anywhere.
Yeah, I'll probably go with Nigeria for the best one. Like, back to what I said at the beginning, what I really like about the Nigerian tax reform program is they're looking at it from a fiscal policy perspective, so
Right.
not just from a tax reform
Yep.
perspective. So that gives the remit much wider to the committee and commission that's looking at that. One of the elements of the work that they're doing, which I think is really exciting, is how they're looking to bring the informal economy much more sort of into the sort of more regulated part of the economy. So, we know that Nigeria has a huge population, and a lot of that is in the informal sector. So what Nigeria is really saying is, if you're a street vendor or you're running a kiosk, and you're sort of living almost day to day, you will be exempt and you'll get a tax exemption. But for the other ones, if you're a hairdresser or you're running a little shop, which is a bit less informal, then you will either need to register under a company and provide details of your revenue expenses, and you can do that without incurring a cost of registering as a company. And then there will be a lower tax rate than if you decide to stay where you are, and you'll probably get sort of a higher tax rate, some kind of flat rate, depending on the number of people in your business, whatever criteria they come up with. So there's really an incentive to register as a company, and I think that will help build trust, and also with that additional data, gives the authorities going forward an opportunity to have the data to inform more trade growth policies.
Right. Yeah, I learned a new term, which was nano business. Okay, you haven't told me the less good example.
Oh yes, the less good example. Well, that probably is closer to home in South Africa. So we had our budget earlier in the year, and literally minutes before the budget was due to take place, it was postponed. Really because there wasn't the political support to get the VAT increase over the line, and the VAT increase took everyone by surprise. So that budget was effectively postponed to a later date, and we're in a complete state of limbo. Clients weren't sure whether we were going ahead with the VAT increase. There was a move then to say, okay, well, we're still going to go ahead with it, but we're going to do it over 2 years. That was then challenged in court, and within a day or two of it being effective, the whole increase was scrapped. Meanwhile, the clients have spent a lot of time, effort, money getting their systems ready for that increase. So unfortunately, back to where I started in terms of the predictability, not a high score on that. A positive coming out of it. I think lessons have been learned from that, and the sort of the program which runs up to the budget has been changed to make sure that there is the right support before the budget is announced, so we don't end up in that position in 2026, hopefully.
Brilliant. James, thank you so much for joining me. Those have been some great answers. And again, congratulations on such a successful conference. And I cannot wait until next year. So that'll be great. And thank you for joining us, and come back next time so that you stay global tax ready.